How's it going, guys? It's Ralph here from Beyond the Huddle. Welcome to this week's Bitcoin weekly forecast. Again, sorry I couldn't do it yesterday. Some stuff came up, but don't worry, we got you covered today. We'll be talking about the COT like always, analyzing what the asset managers, the large institutions did with their positions. And then we'll also go ahead and take a look at the charts and see what type of levels we can come up with. Today I'm going to keep it very simple. We'll look at the short-term levels, the long-term levels, and see what we have going on. So let's get started. So as always, starting with the COT here, you can see that the data is coming from the 10th. So as of the 10th of August, here we have their longs, asset managers, institutions. We have their longs going down by 14 to 629, and their shorts increasing to 275 by 41 contracts. Now again, imagine you're in the middle, or at least beginning a strong, full-fledged bull run. Does this seem like the type of positioning that you want to be seeing from the people who are the money, who are the market? I would like to say no. And remember, what we do every single week is we take a look at this data and we try to synthesize it. We try to analyze and make up and try to come up with ideas and reasons as to why they're doing what they're doing based on price and other things, right? So again, that's our first intuitive answer is this is not what you want to be seeing if we were expecting, what, a break of this premium. And I've been talking about this, that when we hit this premium at about, I think, 47 to 50 something K, you needed to see the position stay strong on the long side and the shorts not increase on the short side. Guess what? It did exactly the same thing. It was a double whammy for us. Had we seen the longs drop off, but the shorts decrease by the same amount or more, that would have been a little bit different. But, this specific time we did not see that, and that's very, very interesting. So let's move on to the chart now, and let's check out how it looks on the positioning right here. So we go to the weekly, and then we can see there's still net percentage long, so they're still around the 70s in the percentage long. So you can see this dotted line here, 60. They're still net long because they're above the zero line. That means they have more long positions than shorts. So that still means that the trend is still intact. Okay, they still have more longs than they still have their longs above average, so that's good for the trend. And they still have more shorts, less shorts than the average. So what this is telling me is that this could have been the beginning weakness, because remember, we see that we get the numbers first, and then we, the move happens first, and then we see the numbers and after the fact. If we could see them real time, this would be a much easier thing to predict and to see and to trade off of. But that's the one caveat when using this. It's good to confirm your moves. For example, it confirmed this move higher, but then you need to keep seeing the follow through as you keep moving on and on and on. So either way, what could happen is a big down move this week. It's only Tuesday, and we've already gotten our short-term bearish signal, which I'll show you guys in a minute. I posted it on Twitter yesterday, but we already got our short-term sell signal on Bitcoin, and then maybe we get a big, 5%, 6% down move in the market, and then we see that they actually had a huge drop off in longs, huge increase in shorts, or something weird like that, and then these net positions start to switch, right? They start going below the zero line, they start going below the average, maybe the longs start dropping below the average. So you see, these are the kind of questions you have to be thinking when you're looking at this type of data constantly. Now, I enjoy it because it does give you an edge, but it's also sort of annoying since it is delayed. So there you have it. That's the COT data. Now let's move on to the price. Okay, so before we move on and look at price, I did forget to mention something when it comes to the COT. So if you remember our video from last week, we wanted to see it repeat kind of what September did. So if this was indeed the low, and then we were going to see this here. So if right now was going to be the time where we broke through the premium, so you could see prices slid and never rejected off of it. Well, remember, the current price is the all-time high, and you can see right here what I was talking about earlier is we hit the bottom side of the premium. So if we were going to break that, then you would have wanted to see the shorts, I guess, sort of behave like they did last time. And I'm going by this last one. So you can see 1 week out they increased, which we did do last week. So in last week's data, we increased. What we didn't do this week when the data came in on Friday was go down. You see that right there? So they went up 1 week and they instantly went down to put the position almost instantly to zero. And then they stayed low. This time around, we increased 1 week out, so everything was fine. We were still repeating the September idea, and now we went up again. So that's really important. I want you guys to understand. So it's funny, one of my mentors used to say, when I first started trading in Forex, he used to say that the market always has, it's the same, it rhymes, it just has a variation on the theme, okay? So every single time you're going to see either the same thing, but with a little or it's going to be sort of the same thing with a variation. So maybe this time it's the same, right? The variation on the theme this time could be they go up for 2 weeks in shorts, and then they start to aggressively reduce it. We won't know. But the fact that they're still holding on to their shorts at such a high level definitely tells me that they have and they expect some downside, right? They didn't expect downside back in September because they quickly reduced those shorts while keeping their long strong. Now, we do have our long strong. Now, again, if their shorts are stayed open, now's when we can talk about the chart. So does that mean that now that we hit the premium, and remember, I kept this line here, so and I'll touch on it in a minute, but does that mean that we're going to go all the way back to 35K or something, right? So who knows? But moving on to the price action, so essentially, you guys remember we took a $300,000 position on Bitcoin somewhere around here at 41.8K and then 42.8K during this up leg right here, and then we had this little retracement here. And then we went off to the races, we came back down, and this was the level that we wanted to see. So we ended up saying last week, the level that would turn a short-term bearish on a weekly basis would be this one right here. So you can see that, forget about this red line for now, so I'm just going to delete it. This is how your chart should have looked this way. You were targeting this zone, the premium zone right here, right? We talked about the 47.3 all the way up to 54.7, 55K. And you wanted to see this line hold. So when you do swing low, swing high, look at that right there. Your discount held, and guess what it ended up being? It ended up being the weekly short-term level. So it never, so I tried challenging it here. I remember we went back below it, and then instantly, boom, straight back above it. And then boom, right here, we retested it on your discount on the 4 hour. This is even a 4 hour demand. So let's bring back my red zone before it goes too far. So you can see right here, we hit the 4 hour demand to the tick. I mean, it still impresses me to this day how accurate these demand levels are. Look at that right there. It hits it and then it reverses. Now, here's the thing. Then we finally ended up hitting the bottom side of our target, okay? So remember, we were doing a short-term trade. Well, it wasn't meant to be a short-term trade. We were just going to have to buy because we were long-term bullish. And then we were going to see how the data came out on Friday, this past Friday, to tell us if we should be looking for reasons to sell or if we should be looking for reasons for this premium right here to get broken, right? This premium. Now, as we just spoke about, the premium is telling us, hey, it should probably hold. Although the longs are staying strong and it went down a little bit, the shorts also went up, right? So if the shorts are going up, they expect some type of move lower. So what would the first target be? Well, the first target was, when this got hit, then would have been your short-term weekly level, and that means we get rid of this one, right? And now you start using your premiums a little differently. So we use the discount down here to stay in the trade, and now you're going to start to use it this way. So now we can copy it right here, and you can see swing high, swing low, comes back. You can see right here, swing high, swing low, and it comes back. And I posted something on Twitter yesterday letting you guys know, hey, look, guys, if we go back below this, so see the week starts here, we go up, we hit the premium, and that's where I was expecting a sell-off, and if that sell-off happened, look at this, now you're below the weekly open. And I was saying, okay, because we broke down below this, I am no longer in any trades. So I'll talk about the Ethereum trade tomorrow, but we took profit on all our trades. Remember, we bought somewhere around here. It wasn't a very big trade. It wasn't a sexy trade compared to our portfolio, of course. But, you know, you got to do what you got to do. Sometimes the market won't go, you know, as far as you thought. Sometimes it will. So then look what happened, right? It closes below it. Slams right back above it. So when it was doing this right here, I was thinking, oh, okay, cool. I posted the picture and it just quickly invalidates it. I thought I was going to have to get long again, but it ended up hitting the weekly open, and I told myself, okay, let me not hurry the trade. Let me slow it down a little bit and let me see what it does. So then I ended up going to my daily chart, and I noticed that when you look at your daily candles, you see this right here? So the daily candle from yesterday when I posted the picture, it closed below it. But this one right here had opened here and it was going straight up. So I was telling myself, okay, maybe this is when they're creating the topside wick, right? This is the fake move higher before it starts to expand lower. That's exactly what it was. So we had to stay patient, and we had to wait for this daily candle to see if it was going to go back above this. Using the lower time frame, like 4 hour, 30 minute, 1 hour, might distort the data. We like to use daily candles for these short-term levels, and I like to use weekly candles for these longer-term levels like this one. So of course, if you guys remember, because we're above the purple zone and above the quarterly, we are bullish. So the purple zone is long-term bullishness. So based on that, I would expect then maybe a price move down to what? Back to the quarterly open. Obviously, your first target has to be the monthly open because we have a discount right here. So if you draw it out, we have swing low right here. And then you're going to have a swing high that just formed right there. And now we're looking for this discount right here. So let's draw that out. That'll be our first target, a nice simple discount. And the only reason we wanted to use that is because it lines up with our monthly open, right? There's a confluence there. So there it is. We're going to make this purple just so the colors don't look terrible. So, yep, that should be about right. So look at that. The top side of your support zone matches somewhere, a little bit around where the monthly open is. So we can definitely see a move lower, about 9 to 10 to 13%. Now, if this zone gets broken, then we have to pay serious attention to the 35, 36K. And that's where I wanted my retracement to the entire time. So when we opened up this week, before I was forced to buy, I wanted this down move to go a little further. It didn't do so. And that's why I had to buy it once it went back above the monthly open. And you see how I waited to buy my 300K position until we went back above the monthly open? That's the same reason why I didn't buy, or I didn't buy again, even though we went above it on a lower time frame. You see this right here? So we went back above it here, then we went right back below it. We went back above it here. So someone probably would have bought there, put their stop loss here, or wherever you guys put your stops, if you use stops, that is. And then look at that, now you're crushed, right? But it's because you didn't wait, you didn't stay patient. If you're slamming into a weekly open and swing high, swing low, right? That's a premium right there. So let's get rid of this one. That's a premium sell, swing high, swing low. Well, why would you want to buy into that? You'd want to either buy the low of that before it expands higher, or you'd want to break for that premium to get broken, especially at a weekly open. So I think you guys are starting to get the point. Again, because the shorts are still high, I am expecting this drop that's happening right now. And we want to see it go to either this zone or this zone. As it comes down to the zones, I'll probably post pictures on Twitter, unless by next Monday, it hasn't done so. If these break, then we can start to talk about lower levels and stuff. But because we're long-term bullish, because for the month of August, that is, right? Let's not forget, these are only good for the months, unless they don't change when the new month comes. But you can see my weeklies, they've changed pretty much every single week. So because this makes us long-term bullish for the month of August, any drop to here, we're basically expecting it to hold until it breaks. So there you have it, guys. That's it for today. Again, a little deeper insight as to what I'm thinking for the price action side, considering I wasn't a big trade, and I had to, wiggle my way in and out of the decisions here, because I easily could have, done something stupid here, and right now, I could have been flat out wrong. But it's not about being wrong or right. It's just like you can always get back in. You got to think of it that way, right? You'd rather protect the downside and always get back in if it goes right back up with your level. So yeah, guys, I hope you found some value with this. Tune in tomorrow for the Ethereum breakdown, and then I'll see you guys tomorrow then. Have a great day. Make sure to subscribe. Make sure to turn the little bell icon on to make sure you get notified whenever I make a video, and have a good day.